Good morning traders and welcome to the daily call today, Friday the 7th of July. Before we get started, as always, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay, let us kick off and have a look at what's happened yesterday. Start off in Australia. The trade balance came in at 2.47 billion, much higher than the forecast, and despite this, the Aussie dollar was one of the worst performing majors yesterday. The reasons behind this are predominantly, it seems the Aussie has found a bit of resistance after last month's strong gains, and they're being dragged by lower by profit taking, risk aversion, and a decline in US stocks. So that's the story for the Aussie dollar. In the US, we had the private sector employment change come in at under the forecast at 158,000. Usually this can be a leading indicator of what to expect in tonight's government sector non-farm employment numbers, and looking forward, it appears that Miss Yellen's positive outlook and the softness of last month's reports are really the only reasons why tonight's job numbers could be strong. Everything else is kind of pointing the other way. We need to wait and see what happens. Also from last night, we had the PMI number coming at 57.4, and oil, the inventory is at minus 6.3 million. So that's everything from the US. And in Canada, look at the Canadian dollar is losing momentum as trade balance came in at minus 1.1 billion. There is a bit of resistance forming at that 129 level, and that's a combination of profit taking and softer data from Canada. All right, let's have a look now at our chart of the day, and it comes to no surprise. It's been building. It's giving us a second bite at the cherry. The US yen, we are locked and loaded. We have formed an inside candle on resistance. Now, for some of you who decide that you want to trade this or not trade this, you need to specify these types of things in your trading rules, because we're going into non-farms. Okay, so we could easily spike both directions tonight. So I can understand if some of you will not trade it, but what I am suggesting is that if you are not, it should be specified in your trading rules that you will not enter a position leading to a heavy news night, if that's what you want to do. But some of you may not care, and will take it anyway. Regardless of where you sit on the fence on this one, this is our chart of the day. It's locked and loaded. It's ready to go. Inside candle on resistance, US yen daily. All right, let's have a look at what's coming up. It's a big night tonight, specifically for the US CAD. But what do we have at 6:30 from the UK? The manufacturing production and numbers. At 10:30, this is when all the action starts. We have the employment change and the unemployment rate from Canada, and at the same time, simultaneously, we have the non-farm numbers from the US. So the average hourly earnings, the change, and the unemployment rate as a percentage. So that's the big one. I've highlighted there in red. Let's see what we come up with. Basically, US dollar needs strong numbers to continue a turnaround. Anything soft, then we could basically start to lose momentum, and the whole mood of the market may change. Also tentative today, we have Governor Carney will be speaking, and the G20 meetings, which are ongoing all day. So there you have it. That's everything for the final session of the week, Friday, the 7th of July. As always, guys, please feel free to contact us if you do have any questions. Follow me on Twitter for trade setups and breaking news. Most importantly, hope you all have a fantastic trading day. Have a great weekend, and I'll speak to you on Monday for the daily call. Bye for now.